amateur investors managed to beat Wall Street at its own game. And it's still happening. The people have risen. If you missed that story or you're not familiar with the biggest thing to rock the US financial system since the 2008 meltdown, here's a quick catch-up. It all started with GameStop, a bricks-and-mortar video game retailer. Already under pressure from the competing digital purchase model, the firm found itself really struggling last year, with the lockdowns and subsequent economic slowdown severely affecting its business. Smelling the blood in the water, the Wall Street sharks started circling and shorting the company stock. For those not familiar with financial market terms, shorting means betting that something traded in a market will fall in price and trying to capitalize on it. The speculator borrows the thing, GameStop shares in this case, at an interest and sells it at the current price. When the price falls, naturally or with a bit of nudging from interested parties, they buy the thing and return it to whomever they borrowed it from, pocketing the difference. Let me explain you in other words. Let's say the price of a share is $10. So shorting is when you borrow it for 2 and sell it for the current price, on this case $10. After that, you wait and wait and wait for the price to fall. And it will, because if you are a Wall Street shark, you exactly know it will fall because you have planned everything down to the tiniest detail. Then you buy back the share for only, let's say, $3 and return it to whomever you borrowed it from. Some maths here. You spent 2 plus 3 equals $5. You sold it for $10. The difference, 10 minus 5, equals $5. It is so simple, believe me. Rewind a bit just once and I can guarantee you will understand everything in a minute. Okay, let me continue now. On the other hand, if the gamble goes wrong and the price goes up, the speculator loses money. Since stock can be overshorted with more shares borrowed by speculators than there exist on the market, any professional investor knows there is no limit to how much one can lose. If these Wall Street sharks now panic, they will try to cut the losses and rush to buy at a raised price, fueling and even faster growth, which is called a short squeeze. GameStop shares experienced a short squeeze this month, largely thanks to a Reddit community called Wall Street Bets, which as of now has more than 5.6 million subscribers. Members decided the company was not doomed at all, based on some positive news, such as Microsoft agreeing in November to share with GameStop part of its digital revenues. Therefore, Redditors took a contrarian strategy, buying GameStop stock and thanks to their sheer numbers, pushing up its price. The big losers in the big squeeze were the hedge fund Melvin Capital and the investment consultancy Citron, both of which shorted heavily against GameStop. Melvin even needed $2.75 billion bailout to close its positions. Neither was happy about the loss, but the real problem was very different. The real problem was a lot bigger. one could argue that the reaction from them and other top players would not be as strong as it was if they had been had by some other large player and not a bunch of self-described degenerates. Actually, Wall Street Bets is the polar opposite of those well-compensated market creatures wearing expensive suits and moving about billions of their rich clients' wealth. The Redditors just have fun, post memes, use lingo an outsider might view as crazy, and insist that nothing in their community constitutes investment advice, a disclaimer to ward off regulatory attention from the US Securities and Exchange Commission. Predictably, the American financial elites have rallied to fix the situation. As GameStop stock skyrocketed this week, Nasdaq paused trading, saying it was necessary to stop manipulation by the amateur traders. Even the video messaging platform Discord banned the group for allegedly allowing hateful and discriminatory content, claiming the ouster had nothing to do with the short squeeze. It failed to convince many. The subreddit itself briefly became private, however, reportedly after being pressured by the website administration. More astoundingly, trading app Robinhood shut down the buying of those stocks earmarked by the Reddit investors. The app, which touts itself as an everyman's gate to the financial markets and was one of the primary venues for the community's trade, claimed it was necessary to curb volatility and save clients from losing their investments. Nevertheless, the app landed in hot water, with politicians from both sides of the political aisle condemning the move and calling for an investigation and a class action lawsuit filed against it. Despite the pressure, the mood at Wall Street Bets remains upbeat and they're devilish. People there are posting memes and calling on others to hold the line and keep squeezing. Contrary to what the establishment seems to think, anger and frustration rather than greed and boredom may be the driving forces here. Frustration by the selfishness, greed and avarice, by the sick economic and political system, by the great injustice, frustration by the world falling apart. The people have risen, and it is just the beginning, because now it is not about money, it's about sending a message. The message is to the moon.